Hi, I'm Pavle Sabic. I'm an application specialist in the S&P Capital IQ product and content team, here to bring you the first America's Market Insights. On the topic of rising oil and gas prices, we all talk about the pinch at the pumps. However, a less talked about topic, but no less important, is the credit risk in the energy sector. Through our extensive work with clients, I wanted to touch upon some key observations. Firstly, the global energy sector, as well as US and Canada, use very high leverage, considering debt over equity, notably higher than the average leverage for the S&P 500 and S&P TSX constituents. And in the last 12 months, of the 15.2 trillion total debt in the energy sector, 64% is owned by banks. Again, much higher than the percentage owned by banks for the indices I just mentioned. Concentrating on US and Canada and charting the average PD for 748 companies and the Brent crude price, we make a few more observations. Clearly, the PD is inversely correlated to the Brent crude price. We also see US PD is more strongly correlated in an inverse manner to the crude prices as it trends above the Canadian average PD. Over the 12 months, both Canada and US PDs have started to stabilize, as we see from the chart here. When decomposing our assessment into energy sub-industries, we observe that exploration and production has consistently been one of the higher PD sub-industries, with oil and gas drilling being one of the lower PD sub-industries. Considering that credit risk for all sub-industries is highly negatively correlated to Brent crude prices, a better understanding of risk is necessary. We can see the magnitude of the negative correlation in this graph here. S&P Capital IQ provide a spectrum of risk measures to assess credit from different perspectives. So we're talking from a through-the-cycle analysis using expert-driven assessments to a more market-driven approach using CDS and even equity markets. This credit assessment stretches to the unrated universe as well. Now, in terms of the Canadian and US exploration and production sub-industries, which I mentioned, the unrated entities constitute around 13% of the entire sub-industry. And this is where our tools can be particularly helpful. For more details on the solutions used in this analysis and the breadth of credit capabilities, please visit www.spcapitaliq.com. Until next time.